Welcome to Digital Currents, brought to you by Morgan Creek Digital. I'm Xavier Segura. Each episode, we spotlight the topics and people changing the tech industry with a focus on AI, blockchain, chips, and big data. Thanks for listening, and please make sure to subscribe if you like what you hear. And remember, stay current.
Mark, welcome back. I know you had some trouble coming into Newark, and it sounds like there was some trouble coming back to Chapel Hill.
Well, the good news is we get to see each other, 2 days in a row, yesterday in person and today virtually. Newark, I guess, is having problems with air traffic control and a runway that shut down. So, getting there yesterday was a pain. And then the driver was saying there was some traffic problem around the Holland Tunnel. So it took me forever. But I got to my place, got to the meeting. We, met with one of our portfolio companies. Then I had dinner and I started getting these texts. Oh, your flight's delayed, your flight's delayed. Weather. I'm like, okay, great. I've seen this movie before. They're going to cancel. Thankfully, they didn't cancel. It just got moved later and later. We didn't leave till a little before midnight. I got home about 2 a.m. And so a little time. But look, everything is good today, shamelessly. My birthday, 62nd birthday.
Happy birthday.
So, all right, I did a little swap on the dress today. I put on the green to celebrate the big green candle, my big green birthday candle yesterday.
Excellent.
And I put on the magic internet money wizard, come join us socks, because this is kind of, and not exactly, but kind of the 7th anniversary of Morgan Creek Digital. And, in 2018, when the Magic Internet Wizard was a thing, people were like, join you. Are you out of your mind? You're crazy. I mean, this is stupid. Bitcoin is stupid. Digital is stupid. You're stupid for doing this. And look, we were in the beginnings of what was a really nasty bear market in 2018. The price had peaked in December 17 at 20K. And remember, what's amazing about that. You're talking about big green candles. We went from 10K to 20K in about 5 weeks, from November to December. And then December 18th turned on a dime. They released the futures. People started freaking. And there was a delay in a big custody agreement for institutional custody.
Not to mention, Mark,
deal.
Not to mention that on that time as well, the equity markets weren't faring any better when it comes to Web3 related companies. If you recall, that's also when we jumped in and kind of began investing through Tessera because of the ICO crash and prior boom, where now people were kind of questioning the legitimacy of the business model, the investors that are involved. And there were two things that we saw at every single pitch, Mark. One was marijuana and cannabis-related companies.
Cannabis, cannabis was hot.
And they usually presented at the same time. So they would go to investor crowd and they would say, hey, I've got a great business for cannabis. And then you say, pass. Oh, what about crypto? Okay, tell me more. And so there were this idea of this whack-a-mole VC model. But Mark, I think the listeners want to know that on that delay, if you were able to get some pancakes like we did
yes,
to Dubai.
Well, that delay, that was an epic delay. We were delayed. We were supposed to leave like 11 o'clock at night. We didn't leave till, I think, 8 the next morning. So, we did have to do the pancakes. I had a nice meal in the city at an Italian place. And, it's funny. You go to an Italian restaurant and they're like, we have the best ossobuco. I'm like, all right, you say it's the best, I'll try it. And I'm not going to lie, the vast majority of the times I'm pretty disappointed. Mm-hmm. Last night was actually pretty darn good. It was pretty darn good. So I did have that. I did, I wanted to find ice cream, little early celebration at the airport, but things were shut down. It was late and not a lot of stuff was open. So I will make up for it this evening with my birthday. You talked about the challenges that companies were having post that ICO debacle. And look, we have seen over and over this pattern in the history of money, that whenever money is involved,
Yeah.
you know, decent, hardworking, industrious, creative, entrepreneurial people start trying to find ways to utilize it, forming companies or building things to sell. But eventually, unscrupulous people come and try to find a way to make some of that money for themselves easily, right? Snake oil salesmen and, all kinds of traveling salesmen ilk. And you had the gold miners, and the gold miners actually, strapped on their backpacks and picked up their picks, and they went out and they did some hard work. And the scammers would come and say, hey, I'll sell you a map. Well, I drew the map myself and it's a total scam, but I'll take your money and then I'll use that money for my own benefit. So, stock market, there are penny stocks. Everyone's seen Wolf of Wall Street and all, there are boiler rooms. And so whenever there's money involved, there will be scammers, literally since the beginning of time. So it's not surprising that time was filled with people just trying to get rich quick. And now we've evolved to a point where, look, Coinbase yesterday just announced paying almost $3 billion, for a company that didn't exist 10 years ago, Deribit.
Yeah, that's right.
That owns the market for options and other derivatives in digital assets. And again, there's a market that didn't exist a decade ago, a company that didn't exist. Now someone's paying $3 billion for it, basically looking at the trajectory of numbers of users, percentages of users, the volume of users. And it kind of reminds me of the move that Ken Griffin did at Citadel with Citadel Securities when he became a big options market maker. And here's a crazy stat. This is a crazy, crazy stat. In the last month, 67% of the options volume in America, in our stock market, is overnight options.
Wow.
24-hour options.
Is that playing on the international arbitrage between Asian markets and U.S., or is that purely just gambling?
It's pure gambling. That is pure lottery ticket gambling. That is the stock market equivalent of what's the big gaming site, the sports bet.
Oh, I thought you were going to go for a deep cut, Mark, which I can happily serve you a deep cut. If you remember in one of my favorite National Lampoon's Vegas Vacation, Chevy Chase messes up with his family. He gets booted out of Vegas, so he's got to go to Reno and kind of the backwater casino. Right. And the game that he has to play is guess a number, right? And he just shows up to the guy and guesses a number. Is this kind of what we're saying with this level of gambling?
It is, and look, again, people have been gambling since the beginning of time. And that is what we do. We try to find games of chance. Again, we try to get rich quick. And the internet made that so much easier. We saw that during lockdowns, and you couldn't speculate on sports anymore. So you started speculating. You couldn't go to sports games, and there was nothing to bet on in sports books. So people started betting on stocks. Hey, what do you think that stocks can do today? Can go up or down? That's not based on research. That's not based on analysis. That's just, I think that line on that chart's going this way, or I heard somebody say something nice about whatever. So I think the gambling piece of it is a little out of control. And so, but if you buy options, you basically lose 85% of the time. The stat is that 85% of options expire worthless. So the people who make the money in options are the people who sell the options. So Ken, in his infinite way, and Ken, I've said this over, he's one of the smartest people I've ever met. And I mean, his business building acumen is a masterclass. Yeah. And he took over this options market making, and now he's the dominant options market maker, and he sells people a lot of options, and he's very happy. He also lends people stock. I always worry about that one. Like Goldman Sachs and Citadel, who would borrow stock from those companies? Because they know that they lent it to you and they have big capital. They can squeeze you. So why would you do that? But people do. So all of this comes back to there are big things happening that have made what seemed like a crazy, irrational, wizard-like, chasing, rainbows and unicorns 7 years ago to, real business. I mean, this is real business, fun business. I tell people all the time, I'm having the most fun I've ever had in my career. Not just going to get to hang out with you and S, but mostly because the people that we're engaging with are so creative, so innovative, so motivated, and the technology is so extraordinary. And that's not just obviously in crypto and Bitcoin and digital money, but into all the other ABCDs that we do, everything from, data, which one, just the amount of data is staggering, but then the uses of that data and the ways to store it, organize it, all the things that we've talked about in terms of our thesis are really pretty extraordinary. And the innovation, particularly now coming out of China in chips and compute, and I mean, Huawei is just an amazing company. And I think I saw there's a big, I don't know if it's a documentary or a movie on Huawei. And I think I need to watch it and see it because it's a pretty amazing story. And I'm sure, history is written by the winners, so I'm sure it won't be told exactly the way you'd really like to know. But I think it's an extraordinary tale of how you go from, a pretty small, not so dominant, particularly not dominant globally business to arguably one of the most important companies of our age. And so here we are on the eve of the weekend, which is on the eve of the Sunday, where my guess is we're going to get a big announcement on in the tariffs, right?
And here's the amazing part. Told this,
right? We knew this was coming. We knew that it was all bluster and that it was just, and I like the deal yesterday, the big announcement, the 10 o'clock announcement on, big trade deal with the UK. Like, are you joking? And someone had a great tweet. I wish I could give them credit, but I couldn't find it this morning. Is they showed current account surplus countries on the left and current account deficit on the right. The two biggest current account deficit countries, basically the ones that produce nothing and just consume from all these other countries, are the UK and the US.
Yeah, I was going to say that.
We did a deal together. And the other headline I read was, we're going to cut the tariffs on Range Rovers.
Oh, wow.
I don't know about you, but I'm not running out to buy a Range Rover. I mean, they're perfectly nice, but
if you want to see depreciation, I know we occasionally get into all sorts of topics, one of which is car buying. If you recall, we had that unfortunate issue where there was the dealer outage last year, and I got kind of caught up in the middle of that upside down. But yeah, Range Rovers are historically the worst kind of purchase you can make if you are interested in selling something that does not completely tank after being bought. So, it's one of those
perfectly fine.
Yeah.
If you want to light money on fire for your ego and your comfort, because they're comfortable.
Oh yeah, and they're beautiful to look at.
They're beautiful to look at. They're works of art, and that green color, that Range Rover green, it's my favorite color. And if I just
I'm wearing it right now, courtesy of our friends Alfred. Mark, I got this while we did a conference in Miami. We did the LATAM conference. Mark, it was so cold. It was 55 degrees. I only brought, kind of Miami type of clothes. But then Albert hands me this sweatshirt, which is now my favorite thing that I own, in British Racing Green.
That's perfect. It's perfect. And look, I get it that but the point is the bluster.
Yeah.
That's a big deal. It's just not, and it's a small amount of money. It was like $5 billion total on a $27 trillion economy. I mean, you're talking 0.000. So it's just dumb. But the deal, quote unquote, that they're going to announce with China is a big deal. And look, when the president of the United States goes on television and says, you better buy stocks right now, right? It's only happened twice. I mean, Obama did it literally the morning of the bottom after the global financial crisis. I didn't really listen very well. That I thought that was a dumb statement, but turned out in hindsight, that was a good thing. And I'll tell the bad one myself. I couldn't really understand how the Fed buying bonds was going to get the money into the stock market, because what I didn't understand is that the banks were going to cheat. The banks weren't supposed to own equities, but they did, and they lent people a lot of money to buy equities, so that worked too. But so I missed that. But can't win them all. But this one, the hype around it is so big. And the downdraft was pretty meaningful for a bunch of companies. So if those I don't think they'll eliminate them. They might, but I don't think they will. I think they'll cut them to a level that is, much less onerous. I've heard the number I heard this morning was, it's up to Scott, which I thought was funny. Now Trump's like, oh, it's not me. It's that guy. It's right, Jerry. Even though you're a tariff man. And he said, but 80 sounds about right. But the number that's being floated is 50. So if you anchor at 80 and you do 50, that's such a good surprise. It's still 50%, which is a dumb number.
Well, to your point, Mark, about kind of how some of these forces are interacting and touching our market lately, some of these announcements or fears on tariffs have more or less directly impacted Bitcoin. So some analysts are saying this is driving some of the move, but I'm going to point us to something that we don't talk about that much because we have decided Ethereum is a little bit of a second fiddle.
Yeah.
So Pectra, right, is the name of the latest upgraded. Mark, forgive me, I kind of forget the name of some of these things. There have been many upgrades from Cancun to Shanghai. And so now we've seen ETH really start to recover some of the value that it lost. It still have a long way to go, but this is potentially growth that's not really built on sort of speculative macro conditions, and really on this idea that we have maligned ETH for as being a coin or an ecosystem that if it was made today would not be the best in class, as opposed to Bitcoin, which still has a great amount of merit. So really what this upgrade is aiming to do is to increase the amount of transactions on the chain by lowering fees, right? That was always the knock on ETH. And by having that flexibility to, let's say, pay in other type of coins, a native coin or stable coins, this is this idea that, okay, if I'm going to be this app layer where I'm going to be building applications or even sending money, if it's no longer cost effective or fast enough to do this relative to other chains like Solana or Sui, then my users are going to go away. But this idea that this new upgrade could really be a solution here, and there's going to be more and more upgrades. But it's been on a tear lately, and I'm happy for the ecosystem because, in my opinion, Mark, the gulf between Bitcoin and the rest of the alts, the narrower that is, results into me in blockchain hegemony. Really, is what we want to get, because I think Bitcoin is here to stay, as we've all said, but Bitcoin still has certain applications that need to be worked on, the layer twos. And I basically look at alts as this all-encompassing, Bitcoin plus expanded capabilities here.
So important. And I'll make one minor addition, only because, like, in my former world, the term alternatives became much maligned, right? And alternative investments. And I always said, since day one, when I started back in 04, started Morgan Creek Capital, that whoever came up with the term alternative investments was not a marketing genius.
Sure.
Because people don't like alternative stuff, alternative medicine, alternative music,
Alternative facts.
fashion,
You know?
alternative facts. I mean, they don't like it. And so what do? They say, well, I'll put 2% or 5% in alternatives. I'll leave all this in, like, but alternative to what? What is a hedge fund? It owns stocks, bonds, currencies, commodities. What's a private equity shop? Well, they own common stock, preferred stock, convertible bond. What is a venture capital? And you own common stock or preferred stock. So it's not alternative, but that's what we were stuck with. And so alts in altcoins, I think, got even further maligned into meme coins and the really speculative. So to me, maybe there needs to be some sort of in between. So there's Bitcoin, which digital gold, pure store of value, plus a ultimate settlement layer that I believe, because of proof of work, is the best. And as I said, we talked about the three mental models that it's possible that the Lord of the Rings, one chain to rule all chains could happen, and then you build L2s and L3s on top of it. But there's still this opportunity to have other L1s, other actual blockchains, and they have tokens associated with them. And yes, they're alternative to Bitcoin, but they're not, to me, an alternate. They're an application. So to me, it's the application coins. So app coins versus meme coins. Knock yourself out. Like, and I own one or two that I got airdropped to me, and I don't really follow them. But dog go to the moon. Great. I hope it does go to the moon. That'd be great. But most of that is the get rich quick scammers. Sui, Ethereum, Solana, they're trying, Avalanche, they're trying to build applications. And, what's interesting, and we've talked about this too, is in Web 1 and Web 2, none of the value went to the protocol layer. TCP/IP, which we're using right now, doesn't have value. You can't buy it. I can't buy it. We can't buy it. So who's making all the money? The application layer. Zoom built an application, or Facebook built an application, or, whoever built, Google built an application. And those capture all the value. Well, the application layers of Web3, the ownership layers, there's room for more than one, alternatives to Bitcoin. So I get that alternative is the term we have. Yeah, I don't like it, but I can't, maybe if we had, app coins, Bitcoin, app coins, meme coins, but people like the term alternatives. And they also like the term Bitcoin dominance. Bitcoin dominance peaked a couple days ago. Now, ETH, to your point, has come roaring back, and Solana too. And that is kind of the way markets work. Sure. The big caps move, and just by law of large numbers, it's harder to move them a lot, but a small cap can move a lot with much less friction. Go ahead. Bitcoin hit 100K. Ethereum was 4,000. The second time, it was like 3,800. The third time, it was like 3,900. The fourth time, it was like, 4,000 again. And this time, it was, 1,800. So, of course, the implication for everybody is, oh, my God, ETH has got to double. Maybe. Or ETH could be in a slow, motion train wreck into oblivion because Sui and Solana are better, faster, cheaper. And there's lots of debate. And I think this upgrade is an attempt to stay relevant. And at the end of the day, the early mover has an advantage. No doubt. Get the most activity, you get actual infrastructure built. And, we've all heard of Betamax versus VHS. I mean, Betamax was a better product. I mean, and you think about people like, what are you talking about? A tape, and you put it in a machine, and the tape would spin around and it would read off that. Oh, no. I just push a button and it downloads onto my phone. instantaneously. Like, well, yeah, now, when Netflix first came out, you had to wait 4 days for a full-length feature movie to download.
Jeez. Yeah.
4 days. No one would wait 4 days. Plus, your computer would crash. You'd have to restart it. No one would wait 4 days. So broadband was a pretty big deal. And that's the interesting thing about all tech is the big tech innovation that people have. That's fine. But a lot of times then you need a bunch of other supporting tech to make that work. And that's why tech trends tend to look like this. They tend to start slow and then they start to accelerate as you put all the pieces in place. The internet was perfectly functional when I used to get my internet service from literally a guy down the street with a bunch of, hacked computers in his garage in the first ISP, Internet Service Providers. And then AOL came along and rounded all those, mom and pops up and created a meaningful, but it's still, by sending discs, again, you're young, but all these other young.
I remember those, Mark. They were different colors
Yes.
every couple of months, and they're probably in the landfill or somewhere in the Pacific in that big plastic.
They are. They're that plastic island, but they float, right? But that was still better than not being connected.
Correct.
But now, you push a button and you're connected. Unless, like I had the other day where, they're working on, I was at the house and the house next door had a telephone pole that got knocked down in the storm. And the guys came and they put up the new pole and they cut the wire and left. And so the cable guy or the internet guy, he's like, I hate the city.
Huh.
That they just do this. Like, they just cut it and left. I mean, like, not by accident, like on purpose. But it's not my job. I'm not a cable company. I'm here to put up the telephone pole. And I put up the telephone pole. So crazy stuff.
Well, Mark, we know that it is a big news day when we're about halfway in and we haven't spoken about what is probably a huge driver in what's to come, which is New Hampshire and their passage of a historic bill here. And I think, Mark, if there was ever a state to be the first
Yes.
that is going to create an actual reserve strategy where you can allocate around, up to 5% into public funds for crypto assets of at least 500 billion market cap, which is an interesting number. I think this is the state because their motto, as we recall, is live free or die. That's the most Bitcoin of a Bitcoin motto you can think about for a state.
It is. And look, Bruce, although I'm blanking on Bruce's last name, but one of the early Bitcoiners, he ran actually for Congress up there. He has the Satoshi Roundtable up there and has built a farm, because it's the free state. And, they had one of the first Bitcoin cafes.
It was expensive, right?
First Bitcoin ATMs. And so it's awesome. Now, the part of the reason is you got to get 7 votes to make it pass because there's no other. I'm just kidding around.
It's sparsely populated, but not as sparsely populated as its neighbor Vermont. It makes, by comparison, they look like New York compared to Vermont.
I know. It's all the people that live up there and commute to Boston, right?
That's right.
It's a beautiful place. I'm not making fun of it. It's just one, it's a very small state, and two, there's not that many people there.
Yeah.
But importantly, they did do it. And they have, the ability to be the first. And look, Arizona should have been the first, but, the governor played politics and vetoed what, everyone else had said we want. Texas came close, but, they got stuck in politics. So, North Carolina, it's passed, but it hasn't been, I think it has been signed by the governor. I don't know. That one probably is going to get killed by politics too, because we have a Democratic governor. But which again, this should not be a Democrat-Republican issue. It just should not. It should be a people issue. If people want something, well, that's the way republics are supposed to work, representative governments. Unfortunately, they don't always work that way. I did see a great thing the other day that, and people should remember this, right? We are not a democracy.
Yeah.
We're not. We're a republic. And there's a reason that the founding fathers chose the republic structure and the representative democracy. And it's important because it can't be as easily corrupted as traditional, straight democracies. But anyway, so I digress. This is a big deal to your point that people are realizing that fiat, right, which is at the base layer of everything, money, is a devaluing asset. And if you go anywhere, right, and try to buy anything, you understand that it costs you more green paper notes or ones and zeros on a ledger to get those things. And so what companies like MicroStrategy figured out is like, well, if I leave my money in cash, then it gets less valuable. If I put it into Bitcoin, and you can do this with gold too, it gets more valuable because it's denominated in that currency that's devaluing. So just mathematically, you're going to be more valuable. Now, this week was the MicroStrategy annual event, corporate Bitcoin thing. And it was fun. It was fun for me, my little company, not my little company. I mean, I'm on the board of it. So I'm a little tiny cog in the wheel. But Simon's company, Metaplanet was there and spoke. And there's the lookalike blockchain group in Europe, and Summer Scientific and others were there. And, Saylor came on and said 700 companies will have Bitcoin treasury by next year, up from 130 this year. It's a big, bold statement. And I think those companies figured out, and now governments are figuring out. And is there a world, probably not that far off, where we do get to this thing that Saifedean talks about, the Bitcoin standard, where it is money, and then we use all these other applications on top of it, like stablecoins and other things. Look, there was a huge piece of news that the OCC now grants banks the ability to custody Bitcoin. Mm-hmm. I mean, that is a massive, massive change from a year ago SEC to today's SEC. And then Hester, crypto mom, I mean, she's been amazing the whole time, but she always had a bad boss. Now she's got a good boss. I shouldn't say boss. I mean, she's one of 5, but she's not the most senior. So I guess technically it's kind of your boss. So, but she's now proposed, a network for global settlement of securities. I'm like, we have a company that does that figure. They have this thing called provenance. So maybe they should talk. I think I sent you guys go figure. I mean,
that's right.
That she would think that, but I'm sure Mike is got that on his radar. But we are going to move to a digital world and blockchain oriented world. And to your point earlier about, blockchains that keep innovating and keep finding ways to become part of the fabric of the financial system are going to exist. And the ones that were designed simply to get rich quick, they'll disappear. The same way that penny stocks designed to fleece people disappear. And the companies that endure, that build real businesses and do real things and then don't care. I mean, take General Electric, good example. So General Electric for 100 plus years was this great business. They did lots of things. And then what happened? It got corrupted with bad leadership, and they lost their edge, and they tried to rely, and I love this, but they tried to rely on things like tariffs and government privilege to keep them competitive. Well, then what happens? You get soft, and then other companies outcompete you, and then you lose share, and then you financialize, and then you try to make yourself wealthy through options and then the stock goes down. So now GE's still around, and it's actually been a good comeback story, but it's not the dominant player that it once was. And I think that's because there are other global businesses that have taken share away because they just went out and did what they're supposed to do. And I think the same thing is going to happen in the digital age. And if we, Morgan Creek Digital can be parts of that along the way by investing in these infrastructure businesses, then we'll make money for our clients and partners.
Yeah, I think that it would be only fitting, Mark, that we discuss in our chart of the week something that you're gonna have to give me a little bit of slack here, Mark, is a little bit of a stretch from our ABCDs. But the reason that I bring it up is because the historic announcement from the much noted crypto skeptic, if not outright crypto just villain, if I could word. Warren Buffett has announced his stepping down of Berkshire, effective the end of the year, obviously the end of an era. And as we see markets transition towards a greater acceptance of crypto, I think this is an interesting time, but I'm not going to malign probably the greatest investor of all time in that way. Plus, he's went to my alma mater. So I will choose to honor Buffett in 3 charts of the week, which really exemplify why Berkshire was such a big powerhouse, and maybe, Mark, why it took some institutional investors so long to come around this idea. Because if you see the performance of what he's done and some of the comments, he literally, there's the famous Greek story, and I'm messing up my classics here, but the voice that could launch 1,000 ships, right?
Yes.
So Buffett is like that with markets. And Mark, I will share my screen because this was fascinating on the cover of the Wall Street Journal today with 3 charts that basically summarize Berkshire Hathaway's performance. And this is where I always remind the listeners, this part of the show, check us out on YouTube. You can see the chart of the week as well as the many other things that we have in store from the stock reveal. And also, if one of us is being deepfaked in the current moment in time, spoiler alert, we're both present in the
That's right. We're both live today, but you never know.
Right. You never know. That's why you got to stay tuned.
Technology is coming.
So I will describe, Mark, and you will narrate as per usual. So the first chart we have for you here is kind of a rather odd-looking chart. You've got sort of 2 representative squares, if you will. If you took $100, and we all know that if a penny saved is a penny earned, but if we invest that, we do much more than just earn a single penny to the power of compound interest. You would have taken $100 in 1965, which is when Buffett kind of came in to step in. You would have done fabulously well in the S&P 500, right? The chart is showing us you would make $39,000 through this magical idea of compound interest. However, it's not about how well you do. It's about how well you do relative to how well you could have done if you did a better strategy. So in Berkshire Hathaway, the number is staggering, Mark, $5.5 million. Okay. So the next chart that I will.
One thing
let's pause this.
One thing I like about that chart,
yeah,
is there's a great line that figures lie and liars figure.
Mm-hmm.
And one thing about numbers is they can be manipulated and they can be presented in ways that they may. And there are things called chart crimes, right? Where like you can adjust the axes of a chart to make it look the way you want, or you can, forget to put it in log scale. So it looks like it's this crazy rise when it's really more stable because the way math works, going from 100 to 200 is harder than from 200 to 300. But I like this in the sense that the unit, $39,000 is random. I mean, that's the number that you come up with from the 100. But thinking about money, like laying on a table in a square, okay, that's visually nice. Well, how much more? Because you can say 5.5 million versus 39,000, and you're like, oh, okay, that sounds like more. But how much more?
Right.
It's a lot more. More. and the size of, and it's in Carolina blue, which I love, since that's my color. But I like this presentation, and people, we've talked about it, right? Humans were bad at math generally.
Yeah.
And what we're really, really bad at is the ability to understand compounding over long terms. So the difference in return, like if you're 100 basis points different over 20 years, you can add about, 30 plus percent, 33% of value, maybe more depending on the rate at which you're compounding. But if you add 200 basis points, it isn't a linear, right? It's not double. It can be exponentially more, 4 or 5 times more. And that is one of the beautiful things here is it wasn't that every year you made so much more.
Right.
Berkshire. And in some years, I think 2, he underperformed. Which the funny thing about it is really what Berkshire is. It's a leveraged S&P 500, right? It's an index that is leveraged through the use of the insurance business. So you should expect that it would not only outperform, but it would have a similar performance year in, year out. But then the benefit of leverage gives you that extra compounding. But over a long period of time, that extra compounding turns into massive wealth. And this is because, of course, people are saying, now that Warren has retired, Michael Saylor is the new, Warren Buffett and MicroStrategy or Strategy B, which I think will become Strategy Bank here shortly, is the new Berkshire. Probably not, because it's a different business. Owning a single asset levered is different than owning a diversified portfolio of businesses. But a levered portfolio of an asset that grows is kind of similar. The one thing that is similar, there are lots of people that bought a share or a fraction of a share of Berkshire, held for a very long time, and became wealthy.
You're right. And that's the big point, right, Mark? Because it's not about timing the market as it is time in market.
Time in the market. And there are people who bought some number of shares of Strategy Bank or Strategy and are going to have the same experience.
That's right.
Over time. And we've already seen some of it. And people say, no, it'll stop and Bitcoin's going to go. Just let's think about this. A Bitcoin's always going to be a Bitcoin. What is going to change over time is the number of dollars that exist.
Now, chart number 2, Mark, is another visual where we're looking at, this is a more of a compressed timeline for those that want to get out of the 60s, the golden years, and kind of come into the next millennium in the 2000s. So as of 2000, and you're comparing that against the S&P, there is a pretty big gulf.
This is a seen or smart crime, right? This is selective endpoints, right? Which is, again, if you look at data long enough, you can find, like if you started this in 2000, which year is that? 2007?
Yeah.
It would be a very different story because you can see being a levered portfolio in the global financial crisis was actually worse than being unlevered.
Yep.
So, again, figures lie and liars right. But the point of here is Buffett, before the tech wreck, went into cash. Now, and before 2008, he actually went into cash. Not quite the same. And now he's got the most cash ever right as he retires. And you're like, well, why does he always go to cash before bad things happen? How does he know bad things are going to happen? But that must makes him a great investor. I think I told you guys this the other day. I think there's a story that most people don't know, that right before this period, and it's interesting that they chose this period and not 2 years earlier, or 3 years earlier, 1997. In 1997, Berkshire almost went to zero. Like literally almost went to zero. They had made a big bet on Salomon Brothers, and Salomon Brothers had, turns out, committed fraud. And Buffett had this reputation of being a really great, investor and being a man of high integrity. And it was going to be bad. And again, he's levered, invested in this fraud. And through a series of amazing conversations with Nick Brady, who was the Treasury Secretary at the time, and the Assistant Treasury Secretary. I love this part. No, I guess Brady was the head of he was Treasury Secretary. But the assistant was a young man named Jerome Powell.
Oh, wow. Wow.
And they agreed not to publicize the problems, which gave Buffett time to get in there. And now he still lost a bunch of money, but it didn't become a big scandal and they didn't get a big margin call. And so, but it's interesting because it literally could have gone to zero, but it didn't. And then 3 years later, they did much better. And you see, they were basically flattish from 2000 to 2002. If you avoid that downdraft from 2000 to 2002, where the average, because the market went down 40%, the average diversified portfolio went down 25. If you're starting at 0.6, even if you compounded a high rate, you're not going to do very well. But by starting at zero, that's why you get this massive gap. So this is a little bit of a chart crime. It's a little bit of a...
It is a little bit of funny math here. Yeah.
It's still okay.
They were trying to also, maybe one point here that they were trying to display, maybe not as successfully, was, and this is my stretch, one of my many chart of the week crime stretches here, which is Apple is often described as one of his best investments and also a direction of tech investing more broadly, as well as the startup ecosystem, because as Apple fares, so many companies also fare, the app markets to hardware to AI, et cetera. And really, this moment where he starts to deviate and grow massively compared to the S&P was in 2016, when he starts really going all in on Apple, and you start seeing some performance. So the last chart that I'll summarize, I'll skip some of this net income loss and kind of the sectors. We were more or less familiar of what he likes to use and invest in. Yep. Is the point that you made, Mark, and you must have read the same article, because you came exactly to the point that is super astonishing here, is the cash stockpile, which is, again, a little bit of a chart crime. It goes to 2019, kind of a random period to truncate here, but it's showing, needless to say, an all-time high of cash, which some point to a doomsday type of scenario of what does Buffett know? Why is he leaving the casino now? And what this might imply for a greater market. To me, this signals the rise of Bitcoin, Mark. What say you about this?
It's definitely well, I will interpret this a couple ways. So one, when you buy cash flowing assets, okay, good businesses that generate high levels of cash flow, it's a good investment strategy, and they spit off cash. That's the opposite of the way most people invest, right? They're chasing these, companies that burn cash, and they only go up because the promise. It's like people are giving Elon money for Grok AI, right? Which doesn't generate profit at all. It's cash flow negative, I'm sure. And it's going from 80 billion in valuation a month ago to 120 billion today. Wow. That's insane. It's like OpenAI at 160 billion or 140 billion or whatever. It's just, those are just dumb. Warren didn't buy Apple when it was super volatile and wasn't really generating cash. He bought it when they were a mature company and everybody had one of these, and they could charge a premium price, and they were spitting cash. Like, if you look at Apple's cash hoard, it goes like this. And they had to give it back to shareholders by buying back stock. And so if you buy things like See's Candies and, furniture companies, they spit off cash. So that's the first thing. Buy companies that actually make money. It's an interesting strategy. A lot of people don't do it. So that's one thing. The second thing is you choose then to acquire new businesses with that cash. Well, if the price of the business is super high, you're like, well, I don't want to pay that. I want to pay a low price, right? Buy low, sell high. And so what this is evidence of over the last 3+ years is the valuations in the U.S. are in Stupidville. They're just dumb. And so he's a smart guy. He's not going to buy an asset at this price, knowing that in a normalized world, it's going to get, now part of that was QE, part of it was zero interest rates. And so again, there are 3 rules to managing money. Roy Neuberger, famous investor, said, rule number 1, don't lose money. Rule number 2, don't lose money. Rule number 3, don't forget the first 2 rules. So here he is saying, I'm going to step down and I want to hand over a nice, easy, fat pitch. That's one of his favorite things. You can wait for the fat pitch. You don't get a called third strike. So I want to hand over a fat pitch to my new guy.
Yeah.
So here's what I'm going to do. If the goal is don't lose money, don't lose money, don't lose money. And so we start here. And if the market's going to go down because of, idiot tariff policy, and I can put it all in cash, I can stay here while the market goes down. Well, now I'm going to start Greg off at 0 and everybody else is going to start here. So he's now gamified that the track record of Berkshire from this point is going to look really good. And he gives Greg and co. a bunch of cash to, in the event that something really bad does happen. Let's say that they don't navigate this backing off of tariffs very well and people actually realize, wait, these companies are overvalued or something else happens, some conflict, whatever, and the markets crash even more, they'll be able to go buy some really good businesses at really attractive prices.
Yep.
And keep the game going.
I mean, that's exactly what I think it means as well, Mark. And we'll probably close on that point. The man known by many names, the Oracle, the Sage, the Wizard, Uncle, and probably to that point, Mark, the quote that he has many quotes, and I think that in a meeting you're always thought of as being smarter if you end it with quoting Buffett. So one thing we say a lot on the show, be fearful when others are greedy and greedy when others are fearful, and that the stock market is designed to transfer money from the active to the patient, which is a good summary of that.
Well, and it's funny, we're not quite matching, with our color today, but you're wearing the racing green and I have the green pants, so we're kind of, but is it kismet that you had stocks honoring the Oracle, the Wizard, and I wore my Wizard socks? I mean,
it's got to be.
We're on the same wavelength.
Absolutely. So, Warren, you are a worthy adversary to Bitcoin, and I think now enjoy retirement, whatever comes after, and as what that means for the rest of our market, things are on the up and up, and we'll continue to bring the live breaking stories that are shaping our industry. And of course, remind our listeners as always, rate, review, subscribe, and to stay current. Thank you for joining us this week on Digital Currents. Check out our links to our website and social media in the show's description box. Please make sure to subscribe if you like what you hear. And remember, stay current.
This podcast should not be construed as investment advice nor solicitation for the sale of any security, advisory, or other service. Investment themes and ideas discussed may be owned by funds managed by the host and podcast guests. Any conflicts at the time of production have been mentioned by the host but are subject to change. Listeners should consult their personal financial advisors before making any investment decisions.